Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market, then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Now, starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical monthly support and demand area. From here, in fact, all these previous rejections to the upside were created. Every time that the market tested this zone, it got rejected to the upside. And what we can notice is that at the moment the market is testing once again the exact same zone, has already started rejecting it to the upside, so more bullish price action could be expected away from this area, as already happened in the past when the market was testing this exact same zone. So here in the monthly, everything is quite clear. Let's drop down on the weekly time frame and see what we have. Now, from a weekly perspective, the situation is quite clear as well. We can notice how we first had a very strong push to the downside, then we had the correction that the market tried continuing lower. However, it failed and is now getting rejected to the upside. So here in the weekly, it is clear how the market has failed continuing lower, created a little bit weird double bottom, but even better actually because it is a higher low scenario. And since now we just also got a new higher high, we essentially are getting a slow transition from a weekly bearish market with the creation of lower lows and lower highs to now the creation of higher highs and higher lows. So the weekly time frame seems definitely quite bullish. Now let's drop down on the daily time frame and see what we have. Now from a daily perspective, the situation is quite clear. We can notice here even more clearly the creation of all these higher lows. Now we just got a new higher high above the previous level of daily resistance. In fact, from here, all these previous rejections to the downside were created. Now the market broke back above that zone. So this previous resistance is now turned support here. Now, since we have an impulse and now the start of a correction, if we want to measure the correction after the impulse, we have to take our Fibonacci from the low to the high of the impulse leg, which shows us how we have a perfect 0.32 retracement, which is lining up with the previous resistance turned support, therefore creating a confluence of support at this area. And when there is a confluence of support zone, there is an increased probability of seeing institutional longing inside of the area. Now, speaking about institutional longing, if we're going to see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and we look at the data precisely for the GBP, the first thing that we can notice is that if we're looking at the data for the GBP, we are actually already looking at GBPUSD because all currencies on the spot are traded against the USD. And what we can notice here is that we went from having minus 21.6k net positions, so a negative net positioning with a aggressive positioning more to the bearish side for the GBPUSD on the institutional side, all the way up to now having minus 3.1k net position. So we are very close from shifting from having more shorts than longs on the institutional side to having more longs than shorts. In fact, we can notice how with the last reports, institutions have decreased their shorts on GBPUSD from 83.9k all the way down to 72.2k, and longs got increased from 59.3k to 69k. So clearly institutions are moving back to the bullish side for GBPUSD. So it would seem like they're expecting a rejection away from that monthly historical support as well. Now, if we move back here on the daily time frame, what we can notice. Now, and by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description. so you never miss new updates. And also here on the daily time frame, I did speak about GBPUSD just a few days ago when the market was right here, and I explained all the reasons for which I was expecting this rejection to the upside. And by the way, you find also that previous analysis linked in the description for more free education. Now back to the analysis. So in a situation like this, where we know that there is the possibility of seeing more institutional longing inside of this confluence of support, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, I wouldn't be surprised to see a potential rejection to the upside for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, all this general free education and analysis that you see me provide on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go and check out my transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to all my courses, starting from the very basics of charting all the way up to the more advanced topics like how to build automated trading strategies using the MQL4 language, how to build portfolios of strategies, and using quantitative finance tools like the quant analyzer to actually build those portfolios of strategies. You also have the possibility to gain access to my trading station software with the Telegram notifications integrations. You can get one-on-one mentorship directly with me. Also, you can gain access to the COT data software, which you often see me use on my YouTube channel. This is an all-in-one program. In fact, on top of all of this, you also have the possibility to gain access to all my personally developed EAs, so my automated trading tools. Here, you will see all the presentations of each and every one of them. And also you have the possibility to gain access to the trading show, so essentially a live stream of all the trades happening in live time from my live account. And if you continue to scroll down past the testimonials, you will see that you can also find the button to join now, and you will essentially be put in contact of my WhatsApp number. So I really suggest that you go and check it out as soon as possible. The link is in the description, and I will see you in my next video. If you enjoyed the video, make sure to drop a like, and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.